Hello, good afternoon. Thank you all for joining today's seminar on wealth management in Spain, what every expat needs to know. My name is Remy Hart. I am a senior wealth manager at Holborn Assets. I wouldn't usually do these sort of introductions. We work in partnership with Your Overseas Home. I think there's a few technical problems from our guest moderator, but I'm sure they'll join in good time. But I think that the purpose of today's webinar and seminar and meeting is more of an informative view on what life in Spain looks like financially. I'm obviously a qualified financial advisor specializing in the expatriate market. So I'll give you a bit of an insight into ways around structuring assets, what to be mindful of, especially when moving to Spain. I understand tuning into a webinar like this with Your Overseas Home, you're in the, I guess, thought process of moving, you're in the planning stages or you're in the latter stages. So I'm sure or hopeful that some of the slides that I'll run through today will be useful. I'll give you a bit of an introduction to myself and the company as a starting point, and we'll go through a bit of a step-by-step guide on relocating to Spain. Now, just to be very clear from the start, I am a qualified financial advisor. I'm not a qualified tax advisor, or am I an immigration lawyer? I think we have Richard back in the room now.
I'm here. Can you hear me?
Yeah, loud and clear.
Oh, good.
Richard, do you want to give a bit of a housekeeping update as far as questions, answers, and so on?
I did actually hear everything you were just saying, but unfortunately you couldn't see or hear me. But hopefully it's all resolved now. So thanks for that. Thanks for introducing everything. So I'll just pick up from what I was going to say, and then we'll carry on. So yeah, it's Your Overseas Home webinar. I'm Richard. I'll be hosting it. Thanks for joining us, Remy. So really the aim of this session is to ensure that anyone watching, whether you're watching it live or this is being recorded, so it will be available on the Your Overseas Home website after the event. If you're watching it live or then this is to ensure that when you move to Spain, whether you're retiring, relocating, or you're going to be a remote worker perhaps, your money, your assets are all structured in the best and the most tax efficient way for you, and in accordance with all cross-border regulation. So Remy is going to be looking at things like pensions, savings, investments, making sure you're tax compliant in Spain. I think you might touch on tax residency as well, and maybe some pointers for inheritance. So Remy's already introduced himself. We're really pleased to have you here, Remy. You've said you're from Holborn Assets. We know you're a senior wealth manager. So we've got about 45 minutes for this session, and most of that will be Remy with his presentation. But we also want to hear from you if you're watching live. So there is the opportunity to ask questions, which you can do using the questions tool, which you should see on your dashboard in front of you. You just type them there, and then I'll field them to Remy at an appropriate time, probably towards the end of his presentation or at the end of it, just so he has time to get through everything. So that's enough from me. Sorry about the delay in my appearance, but I'm here now. Over to you, Remy. Thank you.
We got there in the end, Richard. Good to see you. No, look, I love joining these and seeing if and where I can help. Obviously, Holborn Assets being a large, reputable company and partnering with Your Overseas Home, certain areas that we specialize in that Your Overseas Home don't, and vice versa. So, long live the partnership, and here to help if I can. And again, just as a reminder, I'm here to provide information based on my knowledge, based on my experience. It's what I deal with on a day-to-day basis. So hopefully I can give you some insights into what to be mindful of on that transitionary period, what to look at regarding how your assets are structured, and perhaps a direction of where to go once in Spain and what it looks like. So I think Richard just mentioned I'm a senior wealth manager. In the last couple of months, I've become a partner of Holborn Assets. I've said that probably 100 times in a month, but I now am head of wealth management for the Spanish and Portuguese offices. So I have popped home at 4:30 today to join the call. I do have a 2-year-old daughter, so I was trying to catch her before bedtime. We are having a lot of renovations, but I am usually in the office all day, every day. Our office is based in Marbella on the south coast. We're currently in the heavy administrative process of moving that office. But we've got offices in Portugal, offices globally. Holborn Assets is a global wealth management firm, one of the largest. And I specialize purely on expats moving to Spain and France. They're my two main areas of specialty. I understand the tax and legal framework in both and how best to structure assets, simply put. But we do advise in 150 countries worldwide. I just had a chance to read this about Remy section. All looks lovely. But, I'm from Cambridge originally. You may tell from my accent. I've been in Spain just over 7 years on the south coast. I'll touch on why we're moving to Spain, but I'm sure that's a pretty simple one there. So I've had experience myself. My family has moved to Spain. And as I said, on a day-to-day basis, I deal with clients making that transition to Spain, whether you're from the UK, US, Ireland. If you are from the US, a lot of the advice I'll talk about today somewhat will be irrelevant because there's different sort of ways to set up and structure your assets. But just on that note, I'd recommend reaching out to me to perhaps get in touch with a US qualified, cross-border specialist that works within Holborn who'll be able to help. So who are Holborn Assets? Guys, this is a free informative session and we're happy to help, and I'm happy to follow up and have free consultations with anyone and everyone to see what direction individually or as a couple you want to move in, or a family. But before sort of taking any next steps, we'd always recommend doing your own due diligence on us as a company and me as a qualified advisor. Holborn Assets, there's a lot of reasons I work for the firm. They've been around since 1998. They operate in most jurisdictions worldwide, and the most important things for a client perspective is that we're licensed and regulated to give advice. That's purely there for investor protection, and that's the most important thing. Another point is that we're independent. Albeit we're quite a large firm, we're a family-owned business. We are completely independent. We're not tied to any bank or institution. We've got what's called freedom of market, so it allows us to pretty much work with anyone and everyone to put the right advice in front of the client and make sure it's suitable. We have a very strict compliance process to ensure that the advice is suitable, putting the client's needs, objectives, income requirements, risk tolerance at the heart of the advice. But as I said, I'm open to free consultations with anyone to see if and where I can help. As I said, I'll take you on a step-by-step journey on the move to Spain. And just to reiterate, I'm not an immigration lawyer. I don't work for the Spanish Tourism Board. I am not associated with the Spanish Hacienda. I do pay tax in Spain. And I'm not a tax advisor, but I am a specialist cross-border expatriate financial advisor. So, if you've got specific questions about Modelo 720s, tax returns, I'm not the right person to speak to. I probably could answer you, but I'm not qualified to give that advice. Similarly with what type of visa. So why choose Spain? I think that's probably a silly slide, to be honest. You all know why you're moving to Spain: the weather, the wine, the sangria, the lifestyle. I'll let you make your own decisions there. Obviously deal with your overseas home as far as what region to move in, what agents to work with when looking at properties. I can give you a nudge on what the cost of they'll sell's like, and I have clients all along the coast in Madrid and Barcelona, but other than that, we'll leave that one to you. Visas, again, I'm not an immigration lawyer, but deal with this on a daily basis. So most popular visas generally are the non-lucrative visa. That's the retirement visa. It just allows you not to work in Spain. And that's a pretty straightforward one. You have to show sufficient income and savings, or the digital nomad visa if you're planning to work, or different type of employment visas depending on your business or economic setup in Spain. But yeah, we'd always recommend speaking to an immigration specialist to see what fits your family and what the best solution is for you. Tax and residency, I think this is an important one to firstly understand when you're thinking of moving or you're in the process of moving. I come across this all the time as far as people having a mindset of I'll sell my house and move the following month. It's not quite as straightforward as that. We have to be mindful of the different tax years. The UK April to April, Spain's tax years are calendar years, so January the 1st to December 31st. You may ask, why is that important? That's important when we're liquidating assets in the UK or thinking about liquidating assets in the UK, because then the timing has to be correct. All we're trying to do is not be liable for tax in the UK that may be exempt, like the sale of a main residence in the UK. You're exempt from capital gains tax on that. If that sale moved into the calendar year that you become a Spanish tax resident, then the Spanish Hacienda will deem you liable for the capital gains on that property. So again, something to be mindful of. That, for example, you put your house on the market now, it sells in February 2026. You move straight over to Spain, buy a house, and live the rest of your years there. You have then become a Spanish tax resident in 2026. Spain will then deem you liable for the capital gains because the house sale fell in that calendar year. So again, we'd always recommend speaking to a local tax advisor, someone who's familiar with cross-border tax advice. We have plenty of different partners and professional networks in that space all across Spain. That also really becomes important when we are, liquidating ISAs, for example. Some people say, I've got an ISA in the UK, I'll just keep it, or a portfolio investment, and I'll live off that, for example. When you move to Spain, that then becomes taxed at a higher rate compared to just releasing or liquidizing an ISA in the UK, where it's completely exempt. As a UK tax resident, doing that in Spain, you're going to be hit with a higher tax rate. And that all comes down to individual situations. And we're happy to sort of discuss that and look at where best to take income from, how best to set you up. But there is a double taxation agreement. So I think the bottom line is you're never going to pay tax twice. It's just all about the reporting and all about the liability consequences that, the UK, you may have certain exemptions for. It's best to just get that pre-planning correct. That's pretty much it on tax and residency. The planning is essential. So just, speak to someone like myself just to get an understanding. Just through my knowledge and experience, I can guide you in the right direction. For pure clarity, you would need tax advice, clarified tax advice. When it comes to sort of wealth management and finances, obviously we're discussing various different assets that we can look after and manage and how best to structure those. That comes down to property, savings, investments, and pensions, savings, investments, and property. Property, if it's your main residence, great. We don't get involved in that at all. Your overseas home is certainly best positioned to assist with that. Property investment, on the other hand, if that's something of interest, it's something we can incorporate into our advice. But mainly, we're looking at supporting people making that transition with their existing UK pensions, as well as their existing UK savings and investments. Or if the sale of the UK property, a lot of the time people are selling a UK property and that value is a lot more than what they're buying for. So there's a bit of leftover cash to look at and how best to structure that. So starting with pensions, your UK state pension, if you're in receipt of it, or if you're going to be in receipt of it, receive payments as normal in Spain. There is the agreement in place that they'll go up annually, which is good. So not quite a few countries don't have that. So company and private pensions, that's where it becomes a little bit more worth the conversation and looking at a comparison. And that's pretty much all we do. We look at what your current pension policies are, what the benefits are, what happens if we keep those, what the options behind those policies. And we're just looking at comparisons, if it's worth transferring them, if it's worth moving them, if you want more control, flexibility, ongoing management, currency flexibility, and so on, then we just give you alternative options. Long gone are the days of a QRUPS and an overseas pension transfer. The British government introduced a 25% overseas tax charge. So look, pensions is a simple conversation to work out what pensions you've got in place and what it may look like in Spain and how we can help. A lot of the conversations I have is, people releasing money or have ISAs or investments or savings or proceeds from a property sale, but have these pension funds that they think, I'm just going to draw from those in Spain and leave the cash and leave the investments because that'll cover me for retirement income along with state pension. It's not good advice in the sense that, you take pension income, you're going to be taxed at a progressive rate from 19 to 27%. Whereas we could just transfer the ISAs or the savings or the property proceeds into a Spanish tax compliant savings vehicle, which I'll touch on later, which will pay minimal or sort of negligible tax on that returns. And it's all about doing simulations to see where best to draw incomes from. So pensions, what do you do with your private or company schemes? As I said, very much worth a conversation. As of today, generally the advice is to move those into an international SIP. So we're keeping those within the UK. It's a safe and secure jurisdiction to hold and custody money without getting involved in overseas transfers, but having the ability to have a appointed financial advisor. Once you leave the UK, you don't have access to a UK financial advisor, whether that's for your investments, your pensions. Under FCA regulation, they can't advise you, and they don't have passporting rights within Europe. That's exactly where a company like Holborn Assets comes in, and we're licensed and regulated to give advice throughout mainland Europe and most jurisdictions globally. And that's exactly what we do from our Spanish and Portuguese offices. We essentially represent the European arm of the business, and our core market essentially is Spain, France, and Portugal. So we're very familiar with, expatriate advice. Majority of my clients are British. I am from the UK. I understand how assets are structured in the UK and that transitionary period. But I do have clients throughout Europe and Ireland. If you are American, again, reminder, speak to our US financial advisor. And apologies, this slide may be a bit of a waste of time from your point of view, because pensions are different. We'd look at transferring or moving those. In the US, you just keep them in the same structure, but allow ongoing management, similar with investments. So key features of an international SIP. Again, this has to be client specific. It has to be suitable for a client. This isn't just generic advice, and this may be good for you, but we'd have to have that conversation. But we're looking at cheap platforms to run the pensions. We're not moving them out of a pension form. We're keeping them in pension to pension transfer, not creating any tax liability, having more control, flexibility over the pensions, having more flexibility around currencies. You're going to be living in Euroland, spending in euros. We want to have further access to euros. And ongoing advice is key, because we don't just set someone up with a pension and leave them to it, or a savings or investment vehicle. We're a wealth management firm that provides ongoing regular advice. We speak to clients every sort of 3 to 6 months, depending on the nature of the vehicles and the portfolio maintenance that's required. But that's all depending on individual requirements. So pensions, look, is a simple conversation to see what you've got in place and what may be suitable for you. There's never any commitment or obligation to take any of our advice. With free consultations, if we can believe we can help, we'll send over any formal advice. Similarly with savings and investments, there's a wide range of options available when it comes to this. The scope of advice I can give as an advisor at Holborn Assets ranges from general sort of savings accounts, looking at short-term fixed interest vehicles, to wealth tax structuring vehicles from an investment point of view, looking at market-based portfolios, to Spanish tax compliant savings vehicles, to property investments, to pension transfers. The list sort of goes on. So it's all about having that individual conversation to see if and where I can help. So looking at investments and wealth management in Spain, majority of the time we're looking at Spanish tax efficient savings vehicles. And that's generally Spanish compliant portfolio bonds. I can't just share generic information on those, because there's a wide range of vehicles available based on different income requirements, based on different risk tolerance. It all comes down to matching up the specific vehicle for individual requirements and objectives. But look, a simple way of putting it is, an ISA in the UK is a very tax efficient way to save money. When you leave the UK, it loses their tax-free status. You're then taxed on the full gain. And all we're looking at is alternatives to UK ISAs. So we're looking at the equivalent of an ISA from a Spanish point of view. And if you go to a Spanish local bank, it's a minefield, and you're never going to get anywhere. And the products they've got are just woeful, to say the very least. So that's where we come in, and that's what we specialize in, is looking at tax efficient savings vehicles or investments for expats in Spain. I touched on real estate there, but that's certainly client specific. I'm never going to talk people out of bricks and mortar, but if you have an interest in property investment, it's a good, retirement yielding vehicle, for example, and it can form part of our advice. But generally speaking, a Spanish tax compliant savings vehicle to take income from, as well as set up for succession benefits, is the best form of structuring your savings and investment. So benefits, I guess, key benefits include tax deferral. You only pay tax when withdrawing. And very importantly, you only pay tax on the gain element. So if we're doing a direct comparison of just leaving your ISA in place, you've got £100,000 in an ISA, you leave it in place, year one, it grows by 5%. You take out the £5,000 growth, you're going to get taxed at the progressive rate. So it could be, say, 25%. You're going to get taxed £1,250. The comparison is you put £100,000 from the ISA, so you take it tax-free in the UK, put it into a Spanish tax-compliant vehicle, like a portfolio bond, whatever risk level you want at that, and it grows by 5%, year one, £100,000. You can keep it in sterling, you can withdraw it in euros, flexibility around that. The taxable amount is based on the gain element. So of the £5,000, only £250 of that is taxable. And let's say at your marginal rate, 25%, that'll be a £62.50 tax compared to £1,250. I hope that makes some sort of sense. I did speak a million miles an hour, but the tax savings are really, really significant. And, you know, we can run tax simulations for you for each individual sort of setup on that and look at a comparison. Again, currency flexibility, these can be set up in sterling or euros. You can take from them in sterling or euros. Gives you that flexibility to sort of take money in whatever format you want. So lower tax on withdrawals, portion of the tax, yeah. So only the gain element, Spanish tax authority approved. I think that's a big one because most people want their finances in line with the Spanish tax and legal framework. So from a reporting point of view, any Spanish compliant savings vehicle that we set up, so a portfolio bond, we generally tend to use Ireland or the Channel Islands, Luxembourg. We're looking for really safe and highly regulated offshore jurisdictions to hold the assets. But all the vehicles that we use are reported internally directly to the Spanish Hacienda. So any institution we use from a Spanish compliant vehicle, they have their own Spanish Hacienda reporting department. And why is that beneficial? When you take income, for example, they withhold the tax at source. When you have over 50,000 euros, which you may have seen in this previous slide, it has to be declared and reported to the Modelo 720. It makes life a whole lot easier. Now, again, for a key benefit, which isn't on this slide, is succession benefits. It may pop up after, but this all sits outside of your estate for succession. So for a married couple, for example, you can set these up as joint policyholders, both be named on the policy on a joint life last death basis, meaning that if the first policyholder passes away, it turns into a single policyholder under the last remaining spouse, and you can name beneficiaries under that. That can be distributed directly to the beneficiaries on the last death of the last remaining spouse. You know, we don't want to get caught up in a long drawn out probate. It makes life so much easier. And again, we can touch on that in specific individual requirements. This touches on the capital gains tax in Spain. You know, this can be sometimes a daunting slide, I guess, when people are looking at what are the capital gains. This is only daunting if you don't do the correct pre-tax planning prior to a move, because this is a capital gains tax that could be deemed on your UK investments or your UK ISA or your UK property or your UK pensions, for example. So we're here to advise you to steer clear of that. How do we mitigate tax and how do we draw tax efficient income? Spanish compliant wrap reverse and ISA, I think I've touched on this already. Tax deferral, taxed only when you apply withdrawals. You know, if you have a ISA or a UK investment, it's taxable on an annual basis on the gain or the dividends. Gross roll up, again, they grow free of tax until you take from the policy. Partial withdrawal, so withdrawal flexibility. Wealth tax efficiency. So ISAs still count towards wealth tax in Spain. It's something to be mindful of on your overall assets. It's different in each individual region. So we'd always recommend seeking local tax advice on that. The reporting, that's an important part. ISAs must be reported over 50,000 euros. Tax on all gains annually as an existing UK ISA, for example. That's the big one. You know, you're only taxed on the gain portion in Spain. And then succession planning, you know, designating beneficiaries, sitting outside of your estate. This all comes down to having a chat with me to see if it's suitable for you and how your assets are structured and what life may look like in Spain. Now, currency exchange, a partner of ours and your overseas home, Smart Currency, we deal with them on a daily basis. We'd always recommend seeking advice or expertise from a currency expert. You know, I've been in the industry for a number of years, and I certainly lean on currency companies like Smart Currency to help with my transactions, because currency, especially this year, has been so volatile. It's an absolute minefield. When we're looking at moving to Spain, obviously there's going to be certain transactions in tranches of sterling to euros. You know, you want to get an account manager or a personalized sort of trader dealing with those timings of that, because the market can swing so rapidly. We've seen that over the year, especially US dollar to euro. You know, you save thousands by dealing with someone. So, you know, it's, even when it comes to pension planning, we're taking income, for example, you know, your state pension goes to your UK bank if you keep one open. Deal with a currency partner that can just transition that at a really good rate and send it back into your euro account in Spain. Similarly with investments, vehicles, savings, whatever it is, you know, speak to a currency exchange, but mainly around that property purchase, because you have to put it down the deposit, a holding amount, then the deposit, then the final amount. That can take a matter of months. So timing is all about, it's all about the timing on that. What should I do? Well, I guess this is an open invite to speak with me on a 1-to-1 or a 2-to-1 basis. And look, the purpose of that call will be a fact-finding sort of process to understand every single individual aspect to your financial situation and overall situation, looking at how you currently have assets structured, what your income looks like, what your income requirements or objectives look like in Spain, what your plans are moving forward, if you're planning to stay in Spain, what your risk tolerance looks like, what you want to achieve from a savings or investments vehicle, what your pensions look like. We do a full rounded holistic view on financial advice, and that's completely free of charge. You know, we're there to help if we can. This is a QR code directly to my diary. So take your phones out, scan the QR code. It will take you directly to a web page which has an open view of my diary for the next 3 months. Christmas may be blocked out. If I haven't blocked out Christmas Day, don't book that. But I'm happy to have those consultations to see if I can help. And as I said, there's no cost involved. If I think I can help and get to advice point stage, I'll prepare and send any formal recommendations, financial advice. There's certainly no commitment or obligation to do anything or change anything. If we can help, great. If not, you probably have a bit more information. Richard, that pretty much covers off that slide in arguably rapid time. So apologies if I've sprinted through that. But yeah, happy to answer any questions.
Thank you very much, Remy. Yeah, very comprehensive. You covered a lot of ground. But I think we'll start. There's a question that's come in actually from David. I think he must be in the US, because he's asked take-home message for the US. And I want to tie this in with the UK as well. He's saying, so what you were saying about the chain of advice people should get and the jurisdiction for getting advice. He's asking, should you consult, or should he consult with a US-based financial and tax advisors, people with expertise for helping people moving abroad, and then Holborn can help. The advice that Holborn can give will be Europe-based once they've spoken to them. What's the kind of chain of events in getting advice? Because we've had this before where we've talked about how financial advisors in the UK aren't qualified to give advice, tax or financial advice for people living in Spain. So how do people sort of go about that journey?
It's a very good question, and I'll start with the UK, because if you're planning a move, look, we're coming to the end of the year. If you're planning a move early next year, let's speak yesterday. If you're planning a move at some point next year, it's a good time to speak, because there are potentially certain steps you can do in this calendar year if you're going to be a tax resident in Spain next year. But certainly begin the conversations. We, also deal with cross-border tax specialists who can help you. Certainly worth conversation now if you're from the UK. We're not generally going to do too much as far as transition of assets, but pre-planning is essential. Now, from the US, it significantly differs, because if you're planning to move to Spain in the next 12 months, for example, there really is no benefit in speaking with a US-based advisor who's just familiar with US-based advice, because they're not going to understand the tax implications. They may be able to help with some tax harvesting, pre-end of calendar year, for example, But I would just recommend speaking to one of our senior associates who is cross-border qualified. So they can advise in the US. You don't even have to move to Spain. We can advise you. You know, they're dual license, but the idea is that they would look at taking over assets, for example, under management before that move, and then giving you the ongoing advice in Spain, but ensuring that every step is taken from a tax advantageous point of view prior to the move. And then we may get, you know, cross-border tax advisors. We work with Lexity, Greenback tax advisors for a couple of names, for example, who can help point you in the right direction. But, you know, selling the house, liquidating any assets, moving funds overseas. A lot of people in the US are worried about the US, for example, or the dollar, and trying to transition money outside of the US. Speak to a qualified advisor now to understand any potential options. So it may be a case that, where are we? Any US clients, I would just pop an email to me there on the right-hand side of the screen. I don't know if that's very visible. Remy.hart@holbornassets.com. Just saying, please put me in touch with the US advisor. I'll simply send a link like this QR code and book a free consultation because they'll be happy to help.
Okay, and just to say, we can, you're overseas, so we can connect you as well with Remy after this if you haven't got the details there. Okay, and typically, how soon before they move do most of your clients have that initial conversation with you? Is it a 6-month timeline, or are they starting to talk to you a year before their move?
Yeah, again, good question. We can't really formally advise until sort of a couple of months prior. And you know, if we're looking at a pension transfer or setting up a Spanish compliant bond, you know, generally you need to have a fiscal residency in Spain. So if you've got a property already, you know, we can begin that formal advice process. But from a pre-planning point of view, you know, certainly if you're planning to move in 2026, it's worth having a chat now. It may be a case that we catch up in May, June next year because your view is to move in July because you want to wait the 183 days. It's very common. Liquidate your assets at any point in 2026. Not going to be liable for them. And then we can begin the formal advice process at the latter part of next year.
Okay. Out of interest, you mentioned about the difference in the tax years, and in the UK, obviously, it's April to April. Are there any advantages to moving before or after April with the UK, out of the UK, because it means you might be able to put more into an ISA, or does it make any difference?
It doesn't really, because if you move in April, for example, you're then spending the rest of the calendar year in Spain. You're deemed a tax resident. So
yeah,
if you moved in January or April, it's really irrelevant. You know, if you move in July, for example, July the 3rd onwards, I think it's the magic cutoff date, you're then going to be in Spain less than 183 days. I'm not a tax advisor by any means, so I have to be very clear on that. Don't take this as gospel, but you know, there is certain factors that could deem you a tax resident, even if you spend less than 183 days. It could be your economic business in Spain, your families in Spain, they're going to school. All of these factors may add up. So we'd always recommend seeking, you know, cross-border tax advice. But yeah, speak to us. We're happy to point you in the right direction as a starting point.
Okay, look, I think we have a few Americans watching because we've had 2 requests in now for help with getting in touch with a US advisor. So
I'll leave that email on the screen.
Yeah, perfect. So they can get the email there and get in touch with Remy. Another question here from Ian. I think he's talking generally. Do you know if there are any differences for an Irish passport holder, or I guess the information you've been giving about tax wrappers, and is it applicable to Irish passport holders who are in effect EU citizens? Maybe talk about EU citizens generally, because there might be people moving from France who have French residency or citizenship.
It's a very good point. I think I'll start here because Ian with an Irish passport makes life a lot easier. Pretty much scrap this page. When we talk about investment, this says UK expats, but you know, generally speaking, we're looking at Spanish compliant bonds. It could be for anyone in Europe. You're Irish, French, German, it doesn't really matter. You know, maybe apologize because it's a UK company and majority of your overseas home inquiries are from the UK. So that's just on me, but you know, take it as this is overall financial advice for any expat within Europe, really. Again, we have to differentiate from the US because most Spanish compliant bonds or wrappers are will be PFIC and not accessible to US connected clients. So from Ireland, certainly a Spanish compliant bond would be suitable for you. Again, it comes to individual needs and objectives around that, but they're a very good way to structure your funds. And generally, a lot of the time we use Ireland as the custody of assets because of the benefits of keeping it offshore. But yeah, UK, Irish, French, German, Italian, if you're moving to Spain, we can certainly help.
Okay. Another question from me. You mentioned about how the service that you offer, the help you offer, is an ongoing thing. So typically with a client, if they engaged your services in the next month and you had the conversation and you could help them with structuring their using Spanish bond or different wrappers and things, what would you typically do? You'd restructure things, they'd move to Spain. Would you have an annual review with them, or what's the sort of ongoing service? Have you, or is it
I'd like to speak to people more than once a year, but it completely dependent on how the client's assets are structured. You know, a lot of people moving to Spain arguably is at a later point in life and they're retiring or whatever. So all we're simply doing is looking at the lowest risk Spanish compliant vehicle that we could just hold their money and generates them 4 or 5% in a tax efficient way, produces them a bit of income, passes on their money. Those type of clients or setups, we don't really need to speak too much because they're very boring and black and white. But then the flip side of that is, you know, perhaps different circumstances, different age, that we're looking at a more higher risk portfolio, especially the way this year's gone, or the last 5 years has gone, to be honest. It's much more hands-on, it's much more interchangeable. And we have that regular review process every couple of months or whatever it is, looking at maintaining or even improving the performance of the managed portfolio because we're entering markets. And we've had a really good run. It's been a very fruitful 6 months, to say the least. But, you know, we're always cautious of what's ahead. So, yeah, all dependent on client circumstances, what's going on in their life. But our door is always open, you know, for a review process. This is a link to my diary. Every client will have a review link and every client can speak to me whenever they want. But I have a power planner, I have a BDM. We've got significant back-end support. It's not just about setting up a vehicle and leaving you to it. It's a very hands-on approach, if you want it.
Oh, and incidentally, where is your office are you in Marbella? Whereabouts are you?
Yeah, just near Porto Banús, if you're familiar. It's Marbella area, very nice. Yeah, lots of Ferraris and yachts around there, but we don't tend to drive them or go on the boats. Yeah, some of them. We're moving the office actually to Mijas. Most of the guys in the office are based further down the coast, and bit of a fresh start as a partner. So if anyone's in the area, feel free to swing by.
Right. Another question just in from Namal. They ask, if you sell your house in the UK in 2027, I guess this is applicable to them, would this mean you couldn't move to Spain until 2028 because of the tax year to avoid capital gains tax?
Good question. Goes back to the 183-day rule. 2027, for example, you wake up in January, decide to sell your house. The advice generally is to try and delay that move until July, because again, we're coming to that part of the year. Let's example for the question's sake, it's 2026 now. We're getting towards the end of the year. There's an argument to take the house off the market and try and sell the house. I know it's impossible, but look at selling it in April, May, June, for example, knowing that you're then going to move in July and buy a house. So moving at the latter part of the year or second part of the year just makes you not a Spanish tax resident for that calendar year and not eligible for the capital gains.
So that's the safest way to do it, and without leaving yourself exposed to capital gains in Spain, then wait until the second half of the year.
Richard, sorry to jump in. It's similar with, and I think I forgot to touch on this, a pension lump sum. It's a very important point, especially for the UK and Irish. A tax-free lump sum, which everyone's eligible for a company and private pension, is tax-free in the UK. It's not tax-free in Spain. So again, the timing of that has to be important. If you are planning to move in January, February, March, whatever it is, 2026, you want to be initiating that tax-free lump sum in the next 6, 7, 8 weeks prior to the 31st of December, because it will be tax-free in the UK. If you move to Spain, you're going to spend a long time there. You're never going to have the option to take that tax-free money again. If you move back to the UK, yes, you may have it, but 99 times out of 100, it absolutely makes sense to take the tax-free lump sum. It's all specific to individual requirements. But if you move to Spain, the Spanish Hacienda will deem you liable for tax. It'll just be on your progressive income, and they'll tax it. Important point. Sorry, I missed that.
No, that's a really important point. Yeah. And hopefully that remains that benefit after the next oncoming budget here, but we don't know what that's going to bring at the moment. But Mrs. Reeves. But actually, I was going to ask, and maybe you can't answer it. I don't know, and it's not the reason people move to Spain. It could be a bonus, but do most people end up paying if they get good advice and they do the sort of things that you've recommended today? Can they end up reducing their annual tax bill when they move to Spain, or is Spain generally, sort of not a heavy taxation company, but I mean, people move there primarily for their lifestyle, not to save money on tax, but do they end up doing that often anyway? I mean,
it's quite a normal question we get. What's the tax differences? It's because people spend a bit of time in
save a bit of money by moving.
Yeah, a lot of people spend a bit of time in both, right? So they say, if I did spend more than 183 days, I'm going to be deemed a Spanish tax resident, and then I'm going to pay more tax. Probably are if you've got your assets in the UK and they're structured in an ISA or an investment or wherever, what country, Without that advice, then it becomes a bit more, a bit less significant to stay in Spain that extra time. So if we're just breaking it down as far as utilizing the correct vehicles, like an ISA or a Spanish vehicle or a pension transfer or whatever it is, it's pretty much the same. There's not much to it really. So it's more about where do you want to spend more of your time, and 9 times out of 10 that's spending it in the sun, because no one wants to be in December in the UK.
And where do most of your clients? Where are most of they going at the moment? Which part of Spain are they moving to at the moment? Are they joining you in the Costa del Sol, or are they sort of dotted around a bit?
Yeah, Costa Brava, Murcia, Alicante, a lot in the Costa del Sol. Valencia, it's getting quite popular. One of the US advisors I mentioned earlier, he's just moved there with his wife. But to be honest, all over Spain.
Pretty spread.
Yeah, the coast, right? Yeah. Costa del Sol, Costa Bravas, that's where the majority are.
And just give us an idea of the sort of diversity of your client profile. Are they from? You said the UK is where most of them come from. We know we've got people from the US. We've got them on the call now. But what other nationalities are you seeing? Can you help? Is there anyone you can't help?
No, pretty much anyone and everyone. There was a little war broke out in Europe a couple of years ago, and that did bring in some restrictions on what we can do, and there's still a lot of AML in place for that. But no, look, me personally, it's British clients or Europeans, and then we're seeing such an influx of inquiries and movement from the US to Spain, especially in the last 12 months. Funny that, but that's been arguably keeping us the most busy. We're lucky as an organization to have that cross-border license, so that's significantly huge. And a lot of people don't have that. They don't have the accessible rights to advise US connected clients because of the links to the IRS. Similarly, the US advisory firms can't passport their advising rights outside of the US. So that's huge for us. And it's not me personally. I'm as a minefield to the US tax system as anyone, but we do have a special department for that. But yeah, personally, British expats, Irish expats, people moving from France, Spain, France, Germany, Italy, and vice versa.
Okay. So I'll just reiterate that the fact that you can help. You've got the by US advisors who can help cross-border stuff, which isn't something you'll find everywhere. Okay, we've got one more question. We're running a bit over time, but let's just take Gary's question. Another one about selling houses, and again in the UK, they've sold their house subject to contract. and they're expecting to complete in early January 2026. What would be your advice on avoiding any tax liability, I guess capital gains tax liability, if they wanted to buy in Spain prior to June 2026? So they're going to complete in January.
Yeah.
I guess they're moving to Spain. What do they need to do to avoid any capital gains tax?
Look, they're very common, Gary. Maybe I should bring a tax advisor on these seminars next, so that it comes from the horse's mouth. You're right in your mindset, but we have to forget about the idea of buying a house in Spain doesn't mean you're a tax resident by any means. You can own a house in Spain for 20 years. My father did, never a Spanish tax resident. So the point of selling a house in the UK and buying in Spain is never going to have any real influence, obviously, if you spend the majority of your time there and so on. So the again, without understanding the situation, the idea that if you can move the completion date to 31st of December, great. But if it is January, you sell your UK house, you buy a house in Spain, and then just ensure that you spend less than 183 days in Spain that calendar year, you're never going to be liable for that capital gains tax. And I'm not a qualified tax advisor, just to clarify.
No, we won't. Nothing is going to be taken as formal advice, but it is very useful. So I guess the idea is if they buy before June, the end of June, or they don't have to become a tax resident in Spain until the second half of the year. Doesn't matter if they bought it in.
Yeah, exactly. You can buy it straight away in January, but again, it's worth, especially around that. You want clarity, you want it in writing, just so you're safe and you're covered. Because there's even, if you're over 65, you've been in your main residence 3 years, you may be exempt from capital gains in certain regions in Spain anyway. There's all these different exemptions and things to be mindful of. So, going back to this, if it is just tax advice, pop me an email, Remy, this is my situation, this is what my plan is. Just quickly, I need to get in touch with a tax advisor. I'll send an introduction. But it might be worth having a conversation there, because there'd probably be assets or proceeds of a property, for example, that maybe needed discussion. But Gary, you're happy to help, certainly. This is very, very common inquiry or someone I deal with.
Yeah, we've hit a pressure point here. There's more questions coming about this, but I think we won't answer them all. But there's another one that's asking if they go to Spain and they don't spend 183 days in Spain, but they go out for 2 months, they're not going to be a tax resident in Spain for that, unless some other very,
very grey area, that one. Very common question. Depends where you go, depends what you do, depends who's moving to Spain, if it's your full family, your full business. Again, tax advisor. Big red sirens here, to be honest with you, as a licensed and regulated financial advisor, that everyone should seek local tax advice and arguably take whatever I'd said for granted, because it all comes down to individual requirements, comes down to where you're moving, comes down to what you're trying to achieve. You need that official tax advice from a qualified advisor.
Okay. Right, this is the final question. I think you can answer it. Hopefully it's not too long, but it's someone asking, the Canary Islands, are they treated the same as mainland Spain? You mentioned about regional differences. There are regional differences in Spain because of the regional governments. But generally, what sort of taxes can that affect?
Yeah, I've got quite a few clients in Tenerife. I'm going there in 2 days, Thursday. General sort of rules apply from a Spanish tax point of view, from the hacienda. As I said, different regions. I'll be open and honest with you. I can't tell you off the top of my head what the wealth tax bracket is for every region in Spain, but certainly I can point you in the right direction. There's only sort of minor things that differ, but Canary Islands are viewed as similar tax reporting and liabilities as the mainland Spain. Yeah.
I think VAT is lower in Canaries. I know that. So if you're buying a new property, it helps there, and certainly and transfer tax as well. A bit like the stamp duty that they pay on resale properties, it is lower in different regions. So worth looking. But you wouldn't
Save a couple of percent on initial tax, yeah.
Yeah. Right, we're well over time. So thank you very much for all those questions. It's been great, helped get the conversation going. And of course, thank you very much, Remy, for giving up your time. Really, really interesting. We could carry on chatting. I know you've got a young one to put to bed, and perhaps have a glass of wine on the balcony. I don't know, but thanks for giving up time, guys. Take advantage of Remy and his advice. You've got his email there. He can put you in touch with anyone who you need if he can't help you himself. Small request from the team here: if you found this useful, this session, please leave us a review on the review website Trustpilot. There is a link. There it is on the screen now. Thank you very much. Otherwise, that's it from me, Richard, and from Remy. Remy, just make us jealous. What's the temperature there this evening?
I think it was floating around 2021.
Lovely, very
Nice
nice.
and cool.
Yeah.
Freezing.
Well, you might think so. Yeah. All right. Thanks very much.
Thanks,
everyone.
guys.
Thanks very much. Bye.